If you've set up your indicators but still haven't drawn a single line on your chart or set up any alerts, you're only using half of what TradingView has to offer. In Part 1, we covered everything up to adding indicators. Today, we go one step further, drawing lines directly on your chart, marking key zones, and getting automatic alerts when price hits your target levels. You need to know how to use these features to truly get the most out of TradingView. And the drawing tools you'll learn today will come up again when we cover candlestick patterns and chart patterns. Get comfortable with them now, and you'll follow along much faster when we get there. Let's get into it. Indicators show you automatically calculated results based on the settings you choose. But whether price got rejected at a certain level, which zone it's been holding, or which direction it's trending, none of that comes from a calculation. You have to read the chart with your own eyes and draw the lines yourself. If indicators show you what the market is doing in numbers, drawing tools are how you put your own analysis on top. Support lines, resistance lines, trend lines. These are the lines that define your entries and exits. Today we'll go through each tool one by one. The drawing tools are all in the left sidebar. You'll see a vertical row of icons along the left edge of the screen. It might look like a lot, but there are 7 tools you'll actually use. Let's go through them. 1. Trend line. Click the line icon in the sidebar to activate the trend line tool. Click a starting point on the chart, then click an end point, and a line will be drawn. For an uptrend, connect the lows. For a downtrend, connect the highs. A trend line shows you visually which direction price is moving. The moment price breaks through, it is often a signal of a trend reversal, making it one of the most fundamental tools in trading. There's one thing worth knowing here. A basic trend line is just a line segment. It only exists between the 2 points you clicked. But the reason we draw trend lines isn't to document the past. It's to see where price is likely to go next. And a line segment doesn't show you that future zone. There are 2 ways to fix this. The first is to enable Extend Right in the trend line settings. Double-click the trend line to open the settings panel. From there, activate the Extend Right option and the line will automatically stretch all the way to the right edge of your chart. The second is to use the Ray tool from the start. Press and hold the trend line icon in the sidebar to expand the subtools, and you'll find Ray. A ray extends infinitely in one direction from the starting point. If you want a line that's already extended into the future, the Ray tool is the more convenient option. 2. Horizontal line. Click the horizontal line icon in the sidebar. Click anywhere on the chart at the price level you want, and a line will be drawn. Horizontal lines are used to mark support and resistance levels. A support level is a price zone where price has repeatedly stalled or bounced on the way down. A resistance level is where price has repeatedly been rejected on the way up. Drawing these lines on your chart lets you see at a glance where price is most likely to react. 3. Parallel channel. A parallel channel marks the corridor price moves through by combining 2 trend lines. Select the channel icon in the sidebar, then click 2 points, just like you would for a trend line to draw the first line. Next, click the opposite extreme. For an ascending channel, click a high to position the parallel line, and the channel is complete. Parallel channels are useful because price tends to move back and forth between the upper and lower boundaries. The lower line acts as support, and the upper line acts as resistance. In an ascending channel, consider buying near the lower line and taking profit near the upper line. In a descending channel, apply the same logic in reverse. 4. Fibonacci retracement. As we mentioned in Part 1, Fibonacci is a drawing tool, not an indicator. Select the Fibonacci icon in the sidebar, then drag from a high to a low or from a low to a high, and the retracement levels will be drawn automatically. The key retracement levels are 0.382, 0.5, and 0.618. When price pulls back temporarily during an uptrend, it often finds support at one of these levels. Depending on the analysis method you use, you might add deeper levels as well. 0.764 and 0.886 are used in methodologies like harmonic pattern analysis and often act as a last line of defense when the 0.618 bounce is missed. Levels beyond 1.0, such as 1.272, 1.414, and 1.618, are extension levels. These are used not for retracements, but for projecting targets beyond the previous high or low. In simple terms, they're commonly used as take-profit targets. Which levels you use comes down to your analysis style and personal preference. Start with 0.382, 0.5, and 0.618, then add more as you get comfortable. You can add or toggle levels directly in the Fibonacci settings panel. For a deeper look at how to use these levels to find entries, check out this channel's Fibonacci video. 5. Rectangle and box. Select the rectangle icon in the sidebar. Click a starting point on the chart and drag to draw a box. This is useful for visually marking specific price zones. It's commonly used to highlight a support or resistance zone, or to frame a notable group of candles. 6. Text and arrow. Text and arrow tools are straightforward input tools for leaving notes or pointing to specific areas on the chart. They're intuitive enough that no detailed walkthrough is needed. 7. Long position tool. Before entering any trade, there's one thing you always need to check: the risk-to-reward ratio. That means calculating how much potential gain you're targeting relative to how much you're risking. TradingView has a built-in tool that visualizes this directly on your chart. Select the long position icon in the sidebar. It's the upward-pointing arrow icon. Once you click your entry price on the chart, 3 lines will appear. The middle line is your entry, the upper line is your take profit, and the lower line is your stop loss. Drag each line to your desired price level. As soon as you adjust the lines, your risk-to-reward ratio is automatically displayed on the chart. For example, if your stop is 2% below entry and your target is 6% above, the tool will show a 1:3 ratio. A ratio of at least 1:2 is a common baseline. If the numbers don't add up, it's worth reconsidering the trade, no matter how clean the setup looks. Get into the habit of mapping out your risk to reward before entering a trade. It's one of the most effective ways to avoid taking positions where the math isn't in your favor. For short positions, the process is identical. Select the downward arrow icon in the sidebar, and the take profit and stop loss lines will be flipped to the opposite sides. These tools will come up again when we cover candlestick and chart patterns. Get familiar with them now, and you'll move through those videos much faster. Now for the second part. These are the features that make your workflow on TradingView significantly more efficient. 1. Alerts. You can't stare at a chart all day. Alerts solve that problem. Set an alert at any price level you want, and you'll be notified automatically when price reaches it. There are 2 ways to set an alert. You can click the alert icon in the top right of the toolbar, or right-click anywhere on the chart and select Add Alert. You can set conditions, such as price crossing above or below a level, and receive notifications via browser, email, or mobile push notification. A particularly useful approach is to draw your support and resistance lines first, then place alerts directly at those levels. 2. Watchlist. The watchlist is where you keep the symbols you follow. You'll find it in the right sidebar. Add your most watched symbols to the watch list and you can pull up any chart with a single click. No need to search every time. The more symbols you track, the more time this saves. 3. Chart layout, save and share. If you've spent time setting up your indicators and drawing your lines, you'll want to be able to pick up exactly where you left off next time. That's what layout saving is for. Click the Save icon in the top right to save your current chart state. You can name your layouts and manage multiple setups separately. The Share feature lets you share a link to your chart with others. 4. Multi-chart layout. You can display multiple charts on screen at the same time. Click the Layout icon in the top right to choose a split screen option. You can go with a 2-panel or 4-panel layout, among others. For example, pulling up Bitcoin's daily and 4-hour charts side by side lets you run a top-down analysis without switching back and forth. Note that the free plan has some limitations on split-screen options. Today we covered all of TradingView's drawing tools and the key features that make your workflow more efficient. If you've watched both Part 1 and Part 2, you now have everything you need to use TradingView properly. If you want more chart analysis and trading insights, join our free Telegram channel. The link is in the description. If this video was helpful, please give it a like and subscribe. Next up, we're getting into candlestick patterns, and the drawing tools you learned today will be put to use right away. Make sure you don't miss it.